All right, what's up, traders? Do you like my gym shirt that says gym? It's a shirt. It says gym. I got a request from a couple people today to do a top-down analysis, basically just how I would be looking at the charts at the beginning of the day, from the top of the higher level all the way down. So we're going to do an analysis just the same way that you guys like to hike a mountain, from the top down. All right, great, guys. If you're new here, my name's Hunter, and this is Hunter FX. I am your cult leader, the most woke forex trader on YouTube. I will be teaching you things that the other YouTubers do not teach you, and if you haven't noticed, I live in an attic like some people have mentioned. That does give me a little bit more insight into the market. It's a little bit of an attic advantage because I don't actually get to see the sun. Ignore the sun in the background, though. Girlfriend's laughing at me in the background there. I just make this stuff up on the spot. I don't even know what I'm saying. Alright, so I gone ahead and just picked a pair that I don't really ever trade, just a smaller pair here, and we're going to actually delete all the charts there. And being that I am the most woke, handsome, Forex alpha YouTuber that there is, I'm actually going to show you probably the absolute best way that you can do an analysis looking at the very start of a day or the start of a week or something like that. So this would be something I would do going into the Sunday before market open, and we would just kind of draw out our levels maybe. So what we're going to do is start at the top, right? Top down. Get it? That's going to be the most difficult thing you guys learn all day, I swear. Top down, start at the top. All right, cool. So we're on the weekly level. We're just basically determining our long-term bias on this pair, right? And it doesn't matter, fundamentals don't matter because they're already built into how the trend is going generally on the weekly time frame. So we're a little bit bearish bias just on the weekly, and what we would like to do is just possibly draw out any levels of interest. So we can draw out this first one right here, and we're just noticing that that level's been swept. So that's already been tested, that's already grabbed that liquidity, and now that we know that it's been swept, we actually know that it could rally up here for quite some time. We don't know how long. It could have just been that candle, really. And we've noticed we're looking for also maybe some untested zones on the weekly level. That's been tested, so we're not really worried about that. So really, that's all I care about drawing on the weekly. We can jump down to the daily now, right? So you can see just how that wick is looking out on the daily now. And we're still in that downtrend. This was a little bit of a rally, but we've gone back into that downtrend, and it's just kind of building up things that are going to create a bias at this point, right? What are going to be our bias when we're actually going into the day trading side of things? Because that's what I'm teaching you guys here on the channel, is day trading. I'm not focusing on swing trading. So again, same sort of thing. Let's just kind of draw out a couple levels, right? So if you guys don't know how we're drawing out levels, there's plenty of other YouTube videos that I've done. This is kind of supply and demand right here. I've made one video on supply and demand that you can look up there. And this is just kind of drawing the previous order blocks or the supply and demand, however you want to look at it here. Basically seeing that these things are in fact tested. And you can tell right here, those wicks, we're obviously testing these zones, so we're not concerned about this having to come all the way back down there. So everything, in my opinion, has now been tested on the daily. So first of all, we had that sweep here, and we actually had this level being swept there too. And I'm sure when we go down to the 4 hour, we'll see that, okay, it's closed below, but it looked like it was just simply a fake out to pull that liquidity. Why? Why do I say that? Well, simply, we're closing back within and with confluence, right? It's not getting rejected once it gets back to this previous order block, right? So if I draw out that order block there with a little bit of blue, what would have been good for the bears is if we saw a wick above here like that one, and then the rejection, but it was just closing above this order block. So now we're happy to say, during this uptrend, we would have been able to look for these untested levels, and we knew that if we were back down here, I'm giving you guys a little bit of past tense here, I suppose, right? That this level would have been our first target, right? That would have guaranteed, I would have guaranteed that we would have touched that before we break down lower, right? The second we're closing back above here, right? Guaranteed that, you know, I wouldn't have placed a trade like that because it's just a stupid trade. Nobody should trade a basically 1 hour trade, right? but you can use that to your day trading advantage if you did see something like that, for example, right? So then you could use that bias as your day trading advantage, right? But we're going to get into the actual what's going on here. So now that this was tested, broken through, we don't care about it anymore. It's just old news. Nobody cares about that gossip anymore. 15 minutes of fame is gone, right? Just like this channel is going to be 15 minutes of fame. Cool. All right, cool. So now these other zones, right? So we got this zone tested, this zone that was already tested before, and the only other thing that I'd be interested in would be this top, right? And if we do continue up, I know that the top is going to be a point where we would say, maybe there's stops there. Maybe we want to just wick up, liquidate that before we're continuing back into our downtrend. Because why? Remember, we're on that long-term weekly bias, right? You can still day trade this, but we're on that long-term weekly bias, right? And this is, maybe a ton of work. I'm really over explaining things right now, but you guys are really going to get a feel for it to just look at this super quickly. And, you'll get to the point where you'll spend 10 seconds on each pair. Basically, you say, okay, that's going in that trend or whatever, that's hitting this, whatever, and you'll just skip through them and say, okay, that's not a pair I want to see. It's just choppy. It's not trending. So I'll skip to the next pair, something like that. Or you'll do so much analysis on one or two pairs that some people like to do that now. And I'm leaning more to that sense where I want to watch only a few pairs and then just get really good at those pairs. It's just a little bit more accurate for my hit rate. So we see that this was a previous zone, quite obviously. It was tested there before, but it could have rejected off of here on the higher time frame, right? So now we're seeing, what are we seeing, right? We're seeing sweepings of this top, and I just want to confirm that on the smaller time frame, that was a sweep of this top. You can see the stops were obviously here. So it swept that stop, and then we broke down that move that brought us to the high, right? So now, on the hourly, I'm actually thinking that this is a bit bearish now. We've tested everything we needed to, so there's no reason to go up, right? And then we're rejecting down on the hourly. Couldn't be better, guys, right? Couldn't be better. We're going back to the trend. And there's only maybe a couple concerns you might have. Okay, what if this bounces, right? Because that's a really bullish candle or whatever. It definitely could, and it definitely could come back up here, and everything is possible, right? But I think most likely it would come back up here, or maybe jump down there, right? So you have two most probable options. Is either going to dump or come here and then dump. That's going to be most likely. So we're just kind of, again, creating what could happen, right? And then we can jump to the 15-minute, right? 15-minute, we're looking for entries now, right? Where do we want to enter? Okay, we have that bearish bias. We want to short somewhere. Are you going to short here? No, you're an idiot. You're an idiot. Don't short there. Don't do it. Don't FOMO. Let's draw our levels once again. Always the same sort of stuff. This is untested, isn't it? That's untested. So what are we going to want to do? If it comes up here and it goes right there, are we going to want to short it right there after it starts pulling back? No. You're an idiot. Don't do that. You only short it after it comes to the point where you actually want it to go to. Be patient. Be patient. What could happen comes up really close, right? Really close. Doesn't touch it, starts breaking down. You short it here, and then it comes back up. You could have had a better entry, or you just got stopped out because you put your stop in a bad placement, right? Because, you might have been an idiot, so you might have had a bad stop. Or, you put your stop wider, something like that, and now you have a bad trade because your R is bad, So there's so many reasons to not be an idiot, so don't be an idiot, right? I think that's a common theme of this video. Cool. So now that we're looking for shorts right around here, I'll just draw, maybe something here. We would want to see as it comes up to that level, right? Slowing down, right? We don't want to see giant engulfing candles going into that level. Mind you, that could work too, right? You could just have it engulf massively, hit some stops, and then dump down too. It's better to wait to see. So what happens on this level for us to short? There's two options. The first would be it slows down and then breaks down on the smaller time frame. So we'll see something like this, right? Oops, let me get rid of that. So we'll see exactly this right here. Let's assume that this fractal, right? I don't know how to use the fractal thing on TradingView, probably because I'm an idiot, but there's an actual fractal tool that I can move over here. But if you see something like this and then it starts breaking down again, these levels, changing the trend back to the downside, then you can short with conviction, you can short with confidence. You know that it's not going to just break out of there, most likely, right? We trade probability here. We don't know. Anyone who tells you anything is a for sure thing, they're wrong, right? And I think if you scroll back, I definitely told you guys a for sure thing at the very beginning of the video. So I think I'm just the biggest freaking hypocrite, man. It's funny. It's so funny. Okay. Cool. So you're gonna see either a pattern like that, and then you can enter on a short, or you can look quite obviously. What's very common is we know that there's stop losses above this level. So very common would be a wick above and then a closure back below, right? And then you can look at the even smaller time frames, things like this, to really pinpoint any entry, you know, looking once again at the small time frames for untested levels. Be like, okay, I can pull back there, right? And oftentimes you guys on the stream, you will see me trading the 1 minute, and somebody messaged me, they said, why are you on the 1 minute? Are you scalping? No, I go on the 1 minute because I use all of these time frames as a day trader, because I want the perfect entries, right? This is how I trade. I use every single time frame from the monthly to the 1 minute. I don't always use the 1 minute, but sometimes it just gives me those super accurate sniper entries. And you don't have to use the 1 minute because it gets a little bit messy, it gets a little bit fast, and you're going to get a little bit more emotional. But as you grow as a trader, you're going to be able to be more confident with how the 1 minute actually flows. And it's essentially the same thing, you're just more emotional on it, so it's a little bit more wicky around, it jumps around a bit more, so you react worse, essentially. So after you see that short there, then you can short it. And in terms of other options, you might be saying, okay, what are the other options? I'll tell you right out, there are no other options right now. You can always look for longs also, but I would suggest if you guys are learning, right? If you guys are learning how to trade here, you always just want to be trading into your bias, trading into the trend bias, right? So another thing you can do, I'll just quickly note for everyone who's still watching here, I know we're like 11 minutes in there, is you can trade the trend bias of the day, right? So that's something else I will add. The trend bias of the day is more powerful than the higher time frame bias. So if I jump back to this, right, I can show you that the trend bias for the New York session there was down. So I'd be more likely to continue that trend bias, right? Or if we look back here on the previous day, we knew that, remember on the weekly, the daily, whatever, it was a trend bias of down, but the daily trend is much more important, so you'd want to be looking for longs, right? You can see the trend on the day usually stays the same every single time, right? And it doesn't change very often. This is only the one exception out of all 4 of those times that it did actually change on the New York session. And you will notice that on the New York session, that's another hint for you guys, that's generally when the trend change will happen, right? So I think that's basically all for you guys. That's all you really need to know on how to enter the trades for a top-down analysis. If you guys got any questions, please leave them in the comment section below. And until next time, make sure you hit the subscribe button, join the Discord so that you can see some of the signals and whatnot. The signals are not actually signals. I just kind of give them away for free. Basically just tell you guys what trades I'm taking, what trades I'm not taking, things like this. It's just kind of, I like to share with you guys. You can jump in on the trades if you want. But if you lose money, it's your own fault because, as you guys know, I'm an idiot.
Listen.